Hey everybody, Adam Pospisil here from the Pospisil Realty Group. I'm going to bring you through our October 2022 market update, so let's dive right into it. The market is making some dramatic changes. All right, here we are looking at our October 2022 highlights, our freshest data out. Basically, as you can see, the year-over-year sales activities are changing across all categories. So compared to the blistering pace that we saw last year in 2021, naturally that is down off of that. You're seeing 44% in detached, 52% in attached and townhomes, and then of course attached apartment condos down 45. Benchmark price still showing up year over year. We saw some tremendous gains last year in the market, and that is maintained even with market softening, as you'll see in the final line here in the chart. Basically, the benchmark price is down month over month across all categories, anywhere from 1 point something percent right up to in detached. We're going to see that there's a greater softening of 2.4%. So let's kind of roll on through. So let's talk about what's hot and what's not, what's happening out there in the market, what categories are active, which are a little bit slower. It's very interesting because some things are still showing some really good activity, where others have softened a bit more. Okay, let's talk about this. So sales ratio is how we measure our market. Sales for the month divided by active listings gives our sales ratio, percentage of homes that are selling. So the higher the ratio, the more active our market is. The lower the ratio, the slower our market is. So what does that mean? Anything over 21% is a seller's market, 12 to 20 is a balanced market, and 11 or less is a buyer's market. So where are we at for all the different market areas within Vancouver itself? And then we'll jump outside Vancouver. Here we are, West Side detached, we're at a 9% sales ratio. So a buyer's market. Condos and townhomes for West Side, balanced market. Again, you look at that versus last month up there in the top corner, you can see over the previous months it's down from 26%. Okay, downtown. The downtown market itself performs a little bit differently from the rest of the West Side, balanced market as well. You can see it was a little bit lower as well in September, and that has continued in the trend. Detached in the east side, basically in the east side we were seeing a 14% sales ratio, brings us into a balanced market for detached. Within the east side as well, for condos and townhomes, we're also seeing a seller's market. So very interesting to note, primarily driven by affordability, and we're going to talk about that a little bit later. You'll notice the one market of the four that we've gone through, of the five for Vancouver that we've gone through itself, we're basically seeing one market that is still showing a seller's market, and that is the east side attached. So what's happening outside Vancouver? We'll just jump through this very quickly, but if we look at this sort of map of the Lower Mainland here, the green circles are ones where the sales ratios have increased, red is where it's gone down, and this sort of yellow color is where it's holding steady. So you can see when we're looking at detached, as we are on this page here, basically it's pretty consistent that we're seeing more versus last month that are decreasing, some that are holding steady, and a couple that have actually gone up, which is very interesting. We're noting that primarily outside of Vancouver is where that's happening, and that's again primarily driven by affordability. We'll talk a bit more about that. So here we are in attached, very interesting. Again, you can see primarily all are down in sales ratio. Okay, here we are, new listings, looking at the new listings and starts. Basically, we can see that the new listings have come up. Not dramatically though, you can see that it came up in the summer a little bit and it tapered off into September. So that is what's keeping our market from making too much of a drastic change, and we'll show you that in a different graph here. This just talks about the balanced market conditions that we're in for a lot of the categories. This is looking at the entire province now. Okay, and then residential sales right across the province, those are down. So what's happening with prices? Of course, that's always everybody's main question. Primarily, you can see came down over the summer in detached. We saw a little bit of an uptick there in September. In townhomes, down, in condos, down as well, and you can see that trend from where we had our peak there back in the spring of this past year. And again, when we take our average MLS price for right across BC, showing is it coming down a little bit, leveled off a little bit in September there. Across the country, a very similar story. Okay, so the main question we get is, what's your forecast for 2022? Well, it's tough without a crystal ball to know for sure, but let's show you some of the factors that we're looking at to tell where we think the market will go. So the primary market driver factors that we look at today that are affecting our market the most are inventory levels, so that's the number of homes for sale, pent-up savings, the amount of saved money that folks have from the pandemic. Consumer confidence, so how confident are people that the market is a good time to buy in right now, or should they wait? General confidence just out there as far as purchasing behavior goes. And then of course the cost of borrowing, or aka interest rates. So consumer confidence, that is beginning to fall a bit, primarily because of fears of recession, and increasing interest rates also bring down consumer confidence. That's part of the goal of that, and we'll talk a little bit about that. The unemployment rate across the board came up a little bit. It was at an all-time low for a point there, but that has started to uptick a little bit. So let's talk about the cost of borrowing. Cost of borrowing, we're in a radically different interest rate environment. If you look at this graph, going back a number of years, you can see both the variable, of course, and the 5-year fixed are on the rise, primarily driven by the last couple Bank of Canada increases. And then we're going to have a look here now at the forecast here. So the forecast for 2022 and into the beginning of 2023 is further increasing of the rates. Hard to know exactly how much, but a lot of the economists out there are predicting that we're going to see another increase in the end of October announcement. And then of course we have one more in December at the end of the year. So what's the change in the actual consumer price index? Why are we seeing these interest rate hikes? Of course, inflation. Things are getting more expensive. Bank of Canada is trying to cool that activity with bringing up the interest rates. So came down a little bit, of course, last month as we saw the data from August. That was encouraging, but probably not enough to slow that interest rate increase. Just some different components. You can see it's primarily driven by things like the cost of gasoline, some of the energy concerns mainly faced due to the war in Ukraine and other factors at the moment. Historical inflation, so we can just kind of see where we're at now versus going back right until 2020, so and beyond. So unprecedented sort of levels looking at the last 25 years for Canada. Okay, so let's talk about active listings for sale. So we can see that that has been rising pretty steadily. It's at quite a high point. We haven't quite passed our previous peak there that we see on the graph, but steadily rising across the board. Now, this is the interesting part because active listings are rising in different categories at different rates, and that is what is affecting the prices from either softening or sort of holding a little bit more steady as the market changes here. So when we look at the west side, we can see prices actually upticked a little bit last month, which is interesting when we look at our median price. And that's basically just a result here of looking at the overall, the increase here in inventory not being so dramatic and the sales kind of petering along at a steady rate here. Condos and townhomes as well for the west side, similar story there. We saw the inventory come up and sales actually come down a little, but that held still pretty constant. So what's next for prices? Well, that's again everybody's big questions. Here is some of the factors that we're sort of looking at with that. So we talked about some of the main items that are driving our market previously, but let's talk a little bit about some of the main things we're looking at towards the end of the year here. So you've seen this graph in our previous updates. You've been following along. We saw our peak here back in March. The market has been softening ever since. And here are the factors that we're watching. Interest rates increasing, of course. The cooling off periods that are coming towards the end of the year, further softening our market perhaps. That'll be January 1. Higher taxes, there's some discussions about an anti-flipping tax or just general higher taxes for selling. There's a bunch of stuff floating around with that. That could affect our market further. And of course, consumer confidence. We spoke at length about that and how confident everybody is. But the biggest thing we're seeing still is inventory. So what is going to happen with the inventory levels? Are we going to see a surge? That would obviously create a market correction. Or is it going to kind of peter along? That's sort of the million-dollar question that's going to affect many of these categories. As you could see by the other graphs we looked at, depending on how much inventory has come up in those areas, they've either softened substantially or just a little bit, or they're kind of petering along about the same. So here we are in summary. Let's talk about a couple things. What's all the takeaway from this? Prices are softening across many areas and home types. So we can see that in the graphs there. Generally, we're on a downward trend when we look at the whole market as a whole for pricing. The timing and amount of price decrease is being driven by the inventory speed at which it's increasing. So in order to have softening prices, when we look at supply and demand, the demand is holding somewhat constant, coming up and down over months, but it really depends how much of that inventory gets built up. That's going to be affecting our overall pricing. And that's not consistent across all home types. The more expensive properties are less active. So we're seeing the more expensive properties, detached as a simple example in most categories, being the softer part across the whole market. Generally speaking, the detached properties have dropped more in value as well. So what does that mean? Well, it's a great time to buy. The market is softer, prices are down. They're down substantially from our peak in certain categories. And as you look at it, it's a great time to upgrade. So we've been chatting with many of our clients. It's an awesome time to upgrade from a less expensive to a more expensive property, primarily because those more expensive properties have dropped more in value than the less expensive ones. So that upgrade cost is smaller than it's been for quite some time. Thanks for joining us for our market update. We'd love it if you guys could follow along, click subscribe on YouTube, give us a like on Facebook, and we can keep you up to date with more market updates like this. Thank you very much for joining us. We'll see you again soon.